Welcome to this week's LOLC Securities Weekly Market Roundup. I am Megara Vijayamana.
And I'm Tharandomana Sekara. This is the sound of profitability. Sri Lanka's budget deficit fell by 73% to 325 billion rupees as the overall economic activities recovered and the monetary stability was maintained, and Sri Lanka also missed the inflation target. Revenues grew by 35.5% to 4,945 billion rupees. Up to November, there was a current account surplus in the budget, indicating that total revenues were higher than recurrent spending. Tax revenues grew 36.8% to 4,611 billion rupees, and non-tax revenues grew 8.6% to 334 billion rupees, central bank data showed. Sri Lanka has improved tax administration and hiked rates after a sovereign default triggered by aggressive macroeconomic policy to target potential output during the last currency crisis and heavy foreign borrowings amid forex shortages from rates cuts in 3 earlier crises.
Sri Lanka's tourist arrivals hit an all-time high as it reached 154,609 tourists as of December 21, 2025. This was in comparison to 150,563 tourist arrivals in 2024, and despite a slowdown from the effects of Cyclone Ditwah in the first 2 weeks. Sri Lanka's Tourist Hotel Association chief Asoka Hettigoda told Economy Next that the coastal resorts were almost fully booked before Christmas, and the hill country was also getting more tourists and returning to normalcy. Sri Lanka was getting around 10 to 15% more tourists each month in 2025 compared to 2024 when Cyclone Ditwah hit. According to the IMF mission chief for Sri Lanka, the Rapid Finance Instrument, which was approved on the 19th of December, has a 3.25-year grace period and is repayable up to 5 years after that. Sri Lanka will have to pay around 3.275% plus and some surcharges for the $206 million Rapid Finance Instrument loan, according to the IMF mission chief. There have been concerns raised in Sri Lanka that the RFI loan is too expensive compared to other commercial borrowings. The surcharges are based on the level of access based on quota and may rise to 200 basis points in some cases. At the moment, Sri Lanka is getting new disbursements from the Extended Fund Facility after the currency crisis and default triggered by 2020 rate cuts, and is steadily repaying the loan taken after the currency crisis triggered by 2015 rate cuts. Sri Lanka's apparel industry has delivered a robust performance for the first 11 months of 2025, with the cumulative exports reaching $4,571.99 million, which is an increase by 5.42% over the same period last year. Sri Lanka's total apparel exports for November 2025 reached $367.6 million, representing a slight decrease of 1.96% compared to $374.94 million in November 2024. The monthly performance showed mixed results across key markets. For the US market, $152.32 million, which was up by 5.79% from $143.98 million. EU market, excluding UK, $119.61 million, which was up by 3.35% from $115.73 million, and for the UK market, $43.63 million, which was down by 13.83% from $50.63 million, and other markets were at $52.04 million, which was down by 19.44% from $64.6 million. Despite the November softness, cumulative apparel exports for the 11-month period from January to November 2025 demonstrate solid growth, reaching $4,571.99 million, a 5.42% increase over the corresponding period in 2024, valued at $4,336.84 million. Now it's time for the corporate highlights.
Lanka Realty Investments PLC announced the commissioning of a 200 million rupee investment for the country's largest outdoor LED display at its property in Unity Plaza. The high-capacity triple-faced outdoor LED display at Unity Plaza and its related peripherals is projected to cost between Rs 175 million and 200 million rupees. The Board of Directors of On-Ally Holdings PLC expects the installation to materially improve advertising potential and contribute positively to the subsidiary's future profitability, subject to prevailing market conditions. Based on management projections, the investment is expected to generate approximately Rs 150 million in additional annual revenue. ED Creasy & Co. PLC has announced the investment of 500 million rupees in its subsidiary Darley Butler Company Limited as a part of the rights issue objectives. The company said the investment was made through the purchase of 2,393,490 ordinary shares of DBCL at a price of Rs 208.9 per share. EBC said the transaction was intended to enable DBCL to settle its short-term interest-bearing borrowings, thereby reducing interest expenses and improving the subsidiary's gearing position. This in turn is expected to enhance profitability and strengthen the group's consolidated balance sheet.
Here is Tharinder with the ESG update of the week.
The European Union will introduce strict import controls for plastics as it wants to help the European plants, the recycling plants, in order to compete with cheaper imports. Europe's plastics recycling industry has lost more capacity in 2025 than in any previous year, with low-cost plastic imports and high energy costs driving plant closures in countries including the Netherlands, according to the industry group Plastics Recyclers Europe. A particular concern is that cheap virgin plastics, new material made from raw fossil fuels, rather than recycled plastics made from used materials, is being mislabeled as recycled, putting local recyclers at a disadvantage as their recycled plastics cannot compete on price. Here's Megara with the international update of the week.
Gold and silver prices surged and some base metals also showed signs of moving as the market responded to Federal Reserve rate cuts and the halting of deflationary policy. Gold hit $4,475 to the ounce, up from $20 when the Fed was created. The Fed, through so-called full employment policies, broke the gold standards in 1971, improved policy in the 1980s and 1990s, but started to print money from 2001 after macroeconomists called for deflation. The Fed is now operating a so-called abundant reserve regime involving a flow system as well as open market operations, and it has little control over reserve money as soon as quantity tightening is halted. Gold has risen from around 4,100 to 4,450 to 4,475 levels over the past 30 days. Silver has risen to around $72 from $69. We wish you a happy, successful,
and a profitable 2026.